Hey, welcome back. Today we have Bob Hein with Mercantile Bank, and we're going to share a little bit about his story and how he's navigated through multiple decades in a single industry. So,
Multiple decades. Thank you,
yeah,
Alden.
yeah. So, how'd you get started?
Well, first of all, as far as multiple decades, I don't always like to promote that necessarily. I did get into the business in 1987, having graduated from Grand Valley State University and got right smack dab into the mortgage business. So, doing the math is, what is that, 37 years, I think? I think it's 37
That's pretty
years. I
close.
knew you were going to ask me this, so I kind of did the math before I came in. That's a long time, and I don't even know if that's productive when you advertise that. So, on my literature, I say 25 plus years of experience,
Sure.
but yeah, it's been a long time, multiple decades, going into decade number 5 here in about 4 or 5 years. So,
Yeah,
yeah,
lots of
I've seen a lot,
experience. You've seen a lot. Yeah,
seen a lot. Yeah.
one or two changes over the years.
What are two
What?
changes?
No, one or two changes.
Oh, 1 or
Oh,
2 changes. Well, it didn't seem to change for about 20 years, 25 years, and then all of a sudden now, bam, it's changing every 6 months.
yeah.
Uh,
Oh, yeah.
and that's an exaggeration, but yeah, I mean, it just changes so rapidly as everything does, seems to change, and it's just harder to keep up with things nowadays. When, in the late 80s, 90s, 2000s, we just did things the same way year after year after year, and you didn't have to constantly adapt
Right.
so much like you do now.
So let's rewind a little bit. How did you get started? Like, so you said you went to, where'd you grow up? What's the kind of the backstory a little bit?
Well, I grew up in Waterford, Michigan, which is on the east side of Michigan. It's appropriately named Waterford, Michigan, because there is just so many beautiful lakes in Waterford
Mhm.
Township. They say like 10% of the homes, the residential homes, are on a lake, and I think all my friends lived on a lake except for me, but it didn't matter,
Nice.
right? Because you could. So yeah, we did a lot on the lakes growing up. I was very active in sports. I played sports. It seemed like every single day I was doing something, moving from baseball to basketball to football, and it was a lot of fun. Didn't really take my studies too seriously back then through
Okay.
high school. I didn't. I admit it, and I kind of uh, got maybe a reputation back then as the dumb jock.
Okay.
Because I was pretty good in sports, but
Yeah.
kind of all worked together. And then when I got to college, I thought, well, I don't want this reputation anymore. So I started applying myself to studies,
Hmm.
and I enjoyed economics classes, which is not an easy field of study either.
Yeah.
And started applying myself and was getting B's and a lot of A's, and so I kind of shifted my mentality and focus to, yeah, I can learn sophisticated, comprehensive studies and do well with that, and ended up with graduating cum laude and
Nice.
dean's list and all that. So yeah, I was economics major at Grand Valley State, and a lot of people pick their majors obviously, and they're going to go into nursing, or they're going to go into accounting, or they're going to go into human resources, or you can whatever. And they're like, well, what are you going to do with an economics degree? Well, whatever I want to, because I'm not pigeonholed into
Sure.
something, right?
Yeah. Broad enough.
And I always thought that I probably would go into sales anyway,
Okay.
because my father was in sales, and he wasn't college educated, but he was really good,
What do you
really
sell?
good. Um, he had a couple of career changes, but probably the last 30 years of his career, he was working for a uniform company that would sell uniform services, laundry services, basically. Uh, Most people are aware or familiar with Cintas,
Yeah.
the company that was a competitor of Cintas, which is now sold. Aero Uniform, they're no longer in business, but he worked there for about 30 years, worked his way up and did very well. Ended up being a vice president in charge of sales. So I would go in to work with him a lot of times. I would work there summers and winter breaks while I was in college, and I just always kind of thought that I would end up in sales just because I looked up to my dad so much, and I saw
Sure.
how he was um, successful in it. And, just I was just real proud of my dad. He was always the baseball coach, the football coach, all that growing
Nice.
up. And he would give the presentations, the year-end presentations, and it was real good with talking with parents and um, just a really good communicator. And I thought that's probably why I gravitated toward thinking that I'm going to end up in sales, which the mortgage industry is a sales job, whether people want to admit it or not. It is a sales job.
Sure.
We are paid on commission. Um, and I didn't know where I was going to go to work. Getting out of Grand Valley, I think I was offered a job like the week prior to uh, last week prior to final exams.
Okay.
So I took the final exams in advance and then went out to Boston, Massachusetts for training. And,
Wow.
2 weeks after school got out, I'm working for a mortgage company.
That
I
was
don't even know what a
fast.
mortgage is, but
Sure.
but I'm working for a mortgage company.
What was the name of the company at that time?
It was called Plymouth Mortgage, which was local in Grand Rapids too. They had a Grand Rapids branch, I think in Granville. Some of the people that have been in the business a while here locally in West Michigan would probably remember the name Plymouth Mortgage.
Okay.
But I was located in Ann Arbor. They set up a Ann Arbor location. That's where I worked for about 3.5 years before coming out here to Grand Rapids to go to work for another mortgage company.
Okay. What brought you to Grand Rapids?
Good job opportunity, a job to manage a mortgage branch. And I enjoyed managing. I did well managing. It was about a 3.5 year stint. And then that mortgage company sold. Back in the 90s and 2000s, mortgage companies didn't stay around a long time.
Okay.
They often sold. They just sold, or sometimes they imploded.
Yeah.
you know, um,
Now, why do you think that was?
um, just privately owned, and I think that I really don't know because I'm not on that end of it, but just personal
Sure.
opinion. I just think because they're privately owned, and there would be good opportunities for the owners to cash in and
Mhm.
sell their servicing. And uh, I went through it a few times. It's like I was kind of a job hopper back in those days, not necessarily because I was job hopping,
Sure.
but because the companies I was working for were going out of business or selling out to other companies, as a lot of banks did too. I think in the 2000s, or
Early 2000s, I moved back here from California, and I was in the printing industry, but banks were
yeah,
constantly being bought up. It seemed like new small regional banks were popping up almost just to get sold in a year or
exactly.
two, just
Yeah,
like a business model.
yeah, I've thought the same. Just for stock positions, and
Mhm.
yeah, yeah. So there was a lot of that going on. And then we had the housing bubble of 2006, 7, 8, and there were a lot of companies going out of business during that time. Actually, the company that I had come from prior to Mercantile Bank weathered the storm in the housing bubble, and they, I guess probably because we weren't doing all those subprime loans, so
Yeah.
we didn't get fat and uh, greedy and all that. It was hard times. Don't get me wrong; it was
Sure.
really hard times. I had a part-time job selling uniforms
Right.
during the
Came full
housing bubble.
circle.
I'm not afraid, or I'm not ashamed to say it. I mean, we all kind of
Yeah.
had some side hustles going on back then because it was like tough. But anyway, I'm
Mhm.
getting off
No,
topic.
that's good. Like, I think it's, and we can continue on or maybe rewind a little bit again. So you went from the first one was 3.5 years roughly in Ann Arbor.
Yeah,
And
yeah,
then, so that's seems like a fairly quick amount of time to manage an office, to get experience out of college, it seems like a pretty quick turn to, manage an office in a whole different city. So that's a good, what got you there, do you think?
Well, I had worked for a company in Ann Arbor, and the manager's position in Grand Rapids
Mhm.
was becoming available because they were going to let go of the Grand Rapids manager at that
Gotcha.
time.
Okay.
So basically, I replaced somebody. The owner of the company was very hands-on. I mean, you could just go in and, you know, pop in and see him whenever you wanted. I can't remember exactly how we connected to make that discussion, but I definitely, recall sitting in his office and he's like, "Sure, go," and he just gave me a great offer.
Yeah.
So, I was like 29 years old, 28, 29 years old when I took over that position as a manager. And I really enjoyed it. The branch, we're able to get the branch on track and become kind of a major player in the Grand Rapids market. Um, and then after it sold, it was the the personnel in the branch, my friends, the employees, were like, okay, well, where are we going to go? Do we go along with the sale like they're trying to get us to,
Right.
or and it never quite works that way, right? So
Sure.
we all kind of splintered and went our own way. And I'm thinking that I proved myself. I proved myself as a manager. I I it was important to me that I did that, but I kind of just like being a loan officer and
Sure.
just working with my clients and not necessarily having to be responsible for somebody else's income sometimes is the way I look at it as a
Right.
sales manager, and um, you really get invested with people, your employees, your friends, your, you know, um, business relationships. And if they're having a down month, a down year, it kind of wears on you a little bit,
Yeah.
Um, so I didn't want that responsibility anymore. And I just wanted to be responsible for my own production and
I get that.
yeah. So I've just been an independent loan officer since.
Sure. But it gives you more focus, especially if that's what you're good at and you enjoy the most, then why
I
not?
think so. And I think you can give a little better service to your customers because you're not distracted, right?
Right.
When you got one of your employees saying, I need help on this.
I think it can pull you in so many different directions that way. I mean, I've never had employees outside of, a person or two here and there, but
Yeah,
um, it's just a different responsibility level.
for sure.
And if you don't enjoy it, it can take away
Yeah.
from things, even though you're qualified. It doesn't, I think point I'm trying to make is that moving up isn't always the best thing. Um, and it might be for a little while, but it might not be the
Right.
best
It
situation.
depends on the individual and for me, yeah, it was like, okay, I did it. I was good at it. But yeah, I'm okay. I don't need the job title.
Yeah.
I personally I didn't need it. I was glad for the experience.
And sometimes it doesn't bring you might make more money, like from a financial standpoint, doing less or focusing on only loans can give you, more opportunities
Sometimes, yeah,
than the manager might get,
yeah.
especially if you enjoy it and
You
good at it.
see that a lot with the top producers or in whatever industry. It doesn't
Yeah.
necessarily mean real estate or mortgages, but the top producers, the top salespeople are often making more money than their managers,
Right.
and that's the way it should be, probably.
It's the way it was when I was in the corporate world.
Hmm.
Our top sales reps made more than um, pretty much anybody in the company,
Yeah,
sometimes the president even. So
yeah, yeah, yeah. Which
yeah,
when they're signing those paychecks,
yeah,
you
they're
wonder
like,
if they
oh,
will raise their eyebrows, but no, they got to be happy with that because that's what's making the business go.
the whole thing. It drives the whole engine.
Hmm. So yeah, there were some companies. It seemed like 3 year stints here or there for a while, and then I went to work for a local mortgage lender, mortgage company, Priority Mortgage Polaris Home Funding, and that was the company that weathered the storm through the housing bubble.
Yeah.
And
So
I
what are
was,
some of the things you did to get through that? You said side hustles. What you or other people?
yeah, me or other people.
Well, I mean, what did you find? I mean, your team, the company, did the company change anything? Did you just have to pick up side work, like
Yeah,
self-education, improved, skills?
well, for about a year, I went to my dad's company.
Okay.
He was retired at that time, but I had a good relationship with
Hmm.
everybody there, having grown up with the company as a kid. And I worked there for about a year, selling the uniform service while I was doing mortgage loans, but there just was not
No,
any
not much to
mortgage
write.
loans.
Yeah.
Yeah, so it was
Remember
really
that time.
it was a mess. It just everything was a mess back.
Hmm.
So that helped get me through those times. And then coming out of it, I think the company that I was working for, Priority Mortgage, was on the leading edge with some other mortgage companies on how to get buyers approved and closed. And that was with the FHA loan.
Okay. Yeah.
Because it was a situation where conventional loans were really hard to get through. Fannie Mae and Freddie Mac were just, uh, it was just difficult. I mean, you could have somebody with 20% down and, you know, 800 credit, and they'd still reject the appraisal because they'd say it's a declining market.
Yeah. And
And
there's a ton of that. And then
there was,
they held so much, I guess.
yeah.
I mean, they had so many foreclosures at that time.
So we were taking buyers who were, what today would be considered good, strong, conventional buyers, and we
Mhm.
were taking them FHA because that's how they're getting approved. And um, you know, I had clients calling me up, or potential clients that became future clients, saying, "Bob, I hear that you're about the only one in town that are getting loans through. How are you doing it?"
Yeah.
Just taking them FHA,
Sure. Thinking a little
and
different.
yeah, so because I guess because they're backed by Department of Housing and Urban Development, or the government, if you will, they're willing to be more risky at that time in approving loans. And kudos to the buyers that were taking risks back then, because back in 2008, there was, had such a decline in housing prices, but so many people thought they were still going to go down
Yeah.
from there.
And a lot of those properties were distressed physically as well.
Yeah.
So a lot of the properties, that's kind of when I got started full time. And there was a lot of stuff that needed work and a lot of FHA loans.
Yeah, there were.
And and most of them required some seller to do some things or find some really creative ways to
Sellers,
get that shed
yep,
painted.
yep.
Um,
A lot of seller paid cost, and yeah. So the buyers, obviously, it was a buyer's market,
yeah,
to
oh,
say
for
the
sure.
least. Kind of like we could
What's
say
that like again?
it's kind of a seller's market today. It went from one extreme to another. But
Yeah,
um, so yeah, I mean, the buyers were in great positions, but there were also a lot of issues too with buyers with employment. I mean, because it was really the perfect storm. It wasn't just bad loans that created that,
yeah,
although that was a big part of it. It was also a time where we're losing a lot of manufacturing jobs overseas. That just compounded the problem. You
right.
Um,
I remember at that time period in the corporate world, there was a lot of downsizing because of the
yeah.
manufacturing. There was a lot of companies cutting benefits. People would get pay freezes and pay cuts. So
Mhm.
there was a whole lot of things going on in the economy as a whole that led to that as
There
well.
was a lot of unemployment.
Yeah,
Was. So for those, that took the risk then, because it was risky to buy a house then, even though their prices had fallen 30% or whatever it was.
yeah,
Um, I did a lot of 89 ers back then, and so many of my customers came back to me, 3 years ago, 4 years ago, 5 years ago, 2 years ago,
mhm,
and sold their homes for 289.9,
yeah.
and they got all that profit margin for their down payment on their next home. It's just turned out fantastic.
That was that number is so funny. I went to a flipping seminar, and that person was in Boston of all places. She'd flipped like 80 homes a year, and that was her number. She would always try to buy you could buy houses for 25, 30 grand then.
Yeah.
And she would be all in with a 30% profit margin and sell them at 89.9. They always had to have like a hot or a jacuzzi tub
Yeah.
in the time. Like everybody was
She
putting
had her
jacuzzis
business model
in,
down, what would sell, right? Yeah.
and that was the number.
Yeah. 89. Yeah. Yeah. I still remember that. The 89 niner, that was so common back then. Yep. So,
So moving out
so,
of
so,
that, yeah.
so yeah, I was there for quite some time. I was there for almost 20 years. I was there 19 and a half years.
Hmm.
And you build up so much rapport with the company and your underwriters and the owner. And, it was a good spot for me for a long time,
Yeah.
especially, having, the 3-year transition, for probably 10 years leading up to that, every 3 years or so.
Right. Nice to have
Obviously.
stability,
Yeah.
for the client side as well.
Yeah.
Like they always know where you're at.
Yeah. Yeah. Uh, Wonder how many of my refrigerator magnets are around West Michigan now with the,
Yeah.
that.
What? So refrigerator masking. What are some of the other things you've done over the years
I
for marketing? Like
Yeah, very consistently I've done mailings and refrigerator magnets.
I can testify to the mailings.
Had you?
I've
Yeah,
seen a lot of your mailings over the
yeah,
years.
which I've
Great.
discontinued, but I'm going to start up. I've got one ready to go out. But yeah, I mean it's just keeping your name and your
Hmm.
face in front of people. And I was talking to a very successful realtor many years ago about mailings, and he said he did them. And okay, well, what do you do? Do you send like an info letter, like a quarterly info letter, or
Hmm.
And he said you do a postcard. You do a postcard. You know, 9 times out of 10, it's just going to end up in the trash,
Yeah.
right? But at least a postcard, they're looking at your face all the way to the trash, right?
That's true. Yeah.
So yeah, so I do postcards, and there's a lot of email campaigns that people do. I think you start doing those too often, then you just end up in spam.
Right.
So um, yeah, but anything, whatever you're going to do, I think you got to do consistently, right? So
Hmm.
if you can do mailers, you need to do them at least a couple of times a year. You can't do like one and then another one 2.5 years later. It's
Right.
not going
And the goal is just to keep your name and face in
to. Yeah,
front of people.
just stay
Really.
consistent. Yeah, when they're thinking of a mortgage, they think of Bob Hein or real estate Eldon or
So all those years, navigating through all those years, having that magnet that's up on their fridge all year round, or receiving regular mailings, like that's it. One tool that somebody could do to
yeah,
navigate through ups and downs.
yep. And past clients are really such a great source of referrals, obviously
Yeah.
for realtors, but for mortgage lenders too. It's being in the business as long as I have. I'm very blessed and fortunate. I've got dozens of customers that I've done 4, 5, 6 mortgages for
Yeah.
over the years. They bought their starter home, refinanced it. They bought their second home, they refinanced it. They bought their third and final home, they've refinanced it.
Bought their cottage.
Yeah, yeah. So it's yeah, you do good work for people and they remember it, but you got to
Mhm.
stay in front of them too, because they will forget if you know they don't have your contact information or they
Right.
don't know where you're at.
That's something that I've definitely seen the value in recently too, as I went through my database of the past, 20 years. And I'm looking at those and I'm like, I don't remember that. I don't remember that. I don't remember that. I don't remember that house or that name. And I'm like, if I don't remember those, how are they going to remember me? Somebody
Yeah, exactly.
they knew for, a couple months maybe.
Yeah.
And so, that's something I struggled with early on with. I did not keep good. If we didn't become friends or didn't become Facebook friends, then, it was easy to get out of sight.
Is there some kind of connection that you try and make to where you can remember that transaction?
Well, when I went through my database, I started because the reason I did it was I started a monthly newsletter, um, and I would go back and look at the property. I went through each one of those, looked at the name, searched through my email, found out and then I got refreshed by our
Yeah.
conversations,
Yep.
and then I'd look at the property. I find the property address, look at oh yeah, now I remember. Now it goes together, and then I'd look, and then I'd see that the property has sold since, and that they worked with somebody else
Hmm.
because
And that happens.
7 years later, they didn't know who it was.
Right.
Everybody has a friend and an agent or an aunt or uncle, but sometimes it's just they don't even know if I'm still in business. Real estate agents, I don't know, I think it's like a 13-month average when people get in before they cycle out.
Oh, really?
80% of them or something like. There's a number something like that. Don't quote me, but it's a fairly short cycle time, and I've seen that with new mortgage lenders as well,
Yeah.
especially the past couple of years with refinancing gone. People
I
don't last long.
I feel really bad for anybody trying to get into the mortgage business in today's market,
Yeah.
or real estate too.
Yeah.
Uh, it's it's a great job. It's a exciting industry. It's fun, um, and all of that would be appealing to somebody who's younger, wanting to get into sales. But right now, it's just really tough.
It is. What advice would you give to somebody if they were trying to get in now and get started? Like, what are some of the core tenets of being successful?
Well, first of all, they got to be a very positive person because it's going to be discouraging. It's discouraging for a buyer a
For
lot of times,
sure.
right? I mean,
Yeah.
you're making your offer on your 10th home,
Right.
and you just got to realize that that's the market conditions right now. So you got to be a positive person. Um, but you got to be consistent whatever you're going to do, and communication is, I'm going to say, in the mortgage business, but it's in every business, right? Isn't communication the most important uh, aspect of what we're doing and relationships? And
Everything.
it's, yeah,
I say that all the time.
it's communication. So without that, you're just not giving service. And when I led into our conversation saying a sales job,
Yeah.
it is sales because technically we're selling ourselves, we're selling our service, and we get paid commission. But it's not a sales job in the sense that we're trying to talk somebody into something.
Right.
It's we're providing a service, and the better service that we provide helps our sales. I mean, that's really what it is. It's a sales job, I guess technically, but theoretically it's a service.
Sure.
Now there are realtors, there's loan officers who are just great marketers. I mean, they're great marketers, and they've got a team of assistants behind them, and I look up to a lot of those people. Um, I don't know that that would be my style because I'm a little bit more hands on, and I like to do the communication,
Yeah.
and I like to be available. Um, and
You're very
uh,
relationship oriented. I mean, that's the one thing since I've gotten to know you.
yeah, well, thank you. And you in whatever industry you're in, if you're on top of it, I mean, you're just crushing it. Um, I want to be careful on how I say
Sure.
this. Um, you're at the top uh, because you've really learned how to market well, and marketing is part of the business, and service is the other part of the business.
Right.
And the people that are on the top have found a way to do both well.
Absolutely.
But sometimes, if you're a really good marketer and you do a ton of business, sometimes there can be a slip in communication just because you're only one person,
Right.
right? You're
Yeah.
only one
You have
person,
good
and
systems
yeah,
in
so
place.
you want to work with more of an individual or a team where you're going
Mhm.
to be working with assistants.
Right.
So, um, so yeah, I guess the realtors and the loan officers that are really on top have found a way to do both. And I guess I haven't went that far or have not found that, but I'm okay with it. Personally, I'm okay with it.
Well, you've done that. I mean, your marketing is staying in front of people with your mailings, your calls, your texts, your just communication. Um, and you've built great relationships. So I think that just keeps coming back. And then you get referral business. And so that really, I think, is what I've seen that's gotten you through.
Yeah, yeah. Well, it does, when you don't have to sell yourself constantly with
Right.
new marketing and paying for
Yes.
marketing, and your customers sell you for yourself.
Hmm.
Um, you take a lot of pride in that. You get a lot of satisfaction out of it, but it's also, um, it's very uh, economical way to
Right.
market
Right.
yourself. Just do a good
Yeah.
job. Do a good job, period, right?
Yes. and remind people. And one thing I've noticed is sometimes have to tell people or remind them or show your work. Like that's something I hated to do in math class,
Yeah.
but I learned early in sales. It's really just part of the communication process is showing your work. Look, you solved the problem for the client. You got to let them know
Sometimes you do
what you
got to
did.
toot your own horn. Sometimes you do just a little bit. Yeah.
Yeah, and neither of us are big horn tutors,
No,
but you
yeah,
have to share sometimes
you do to a
to let
point.
them know.
So they understand. And I think in most times they do. So yeah, I mean, for me, it's a matter of finding that happy balance in between, marketing and making sure that I'm not cutting my service at all. I've erred in favor of service, being accessible, not relying too much on assistance. No.
Right? Yeah.
So yeah,
So anything else for that, new person coming into the business or somebody, that might have been around for 5 years, but, for the next 10, 15, 30 years?
yeah. Well, for the new person, I've asked this myself. What would I do now if I was just getting into the business?
Hmm.
And it's just a matter of being aggressive. And when I say aggressive, just not being afraid to get out there and talk to people and stay on them in all forms. And I don't even know what those forms and channels are, those platforms.
Sure.
Obviously, people use Facebook, um, Instagram, all of that. Uh, it was so much easier for me because when I was breaking into the business and the way we did business and made sales calls for 2+ decades, we would just drive around town. We'd be
Sure.
in our car, we'd just drive around town. We'd pop in a real estate office, we'd say hi to the receptionist, we'd go walking around in the office. Everybody would have their door open. We could tell if they're really busy, if they'd be willing to chat for 5 minutes. We
Right.
just, have relationships like that and get to know people that way. And we'd carry our pagers on the side. And if
Oh
somebody
man.
paged us, we'd call a realtor from another realtor's office. And that's just the way it was.
Yeah.
But now, as far as a new person breaking in, how would you uh, make these new relationships? I guess it's just a lot of consistent calling for appointments. But that's got to be pretty difficult. I mean, getting somebody into an appointment. I've reached out to a number of realtors in the last year, and as much business as I've had over the years, it's still hard to set appointments.
It is.
So um, I guess if I were really wanting to get into the mortgage business, I would work as an assistant under somebody and learn the business well, learn the ropes. Somebody who I referred to earlier is that they've got like a team behind them,
Right.
and then maybe they can develop relationships through just being an assistant with maybe not obviously that person's clients that they're team member for, but maybe listing realtors or just being in the business. Over time, you're going to learn different referral partners.
I think that's a big one.
Yeah,
You're just building relationships.
and then you've got an income coming in um, until you're ready to go off on your
Yeah.
own. I guess being an apprentice, how I would recommend starting out right now.
Yeah, I think that's a good route as well. I think the office, the equivalent of walking into somebody's office and the doors open is sort of sliding into DMs now on the social
Yeah,
medias.
yeah,
It's different. It's virtually you're there, but it's sort of like the newer version probably.
yeah, yeah. I got a lot of business out of a Remax office back in the '90s, and it all started because I brought donuts every Friday morning,
Yeah,
and eventually I just kind of wore off on people,
sure.
So, so anyway, now I'm bringing some Subway sandwiches to a real estate office every
Perfect.
every Thursday morning.
Yeah.
I'm going very old school to see how that works, and you know what? It will. It's gonna take a while. You gotta be consistent like the mailers,
Mhm.
but it will.
People like food. Everybody likes food. That doesn't change.
They like food, they appreciate it, but I think really what it proves is there's so and so, they're a salesperson. Here's a salesperson trying to get their business, and he's doing the same thing week after week after week.
Right.
And he's consistent. He's not dropping the ball. As silly as it is, it doesn't mean anything. Just Subway sandwiches for breakfast. But he's consistent and he's like clockwork. He gets it here every Thursday morning. So that's building kind of trust and respect from that standpoint, really
Right.
is what it's all
Trust,
about.
respect,
What it's all
consistency, all
about.
that. Yeah.
Yeah. Yeah.
People buy from people they know, like, and trust.
Yeah, and eventually, you have those conversations in the kitchen. Oh, what are rates are at, or what's this new program I heard about? And then,
Mhm.
that's that's how I built my realtor referral base back in the '90s and 2000s, is being in front of people. But yeah, I mean, it's harder and harder to do that right now that we're all connected with our phone and everybody's kind of off site, and
Yeah.
so, even if all the realtors did show up in the office, you couldn't get past the
Right.
front desk in most cases.
Getting them at the same time. Yeah.
Yeah.
That's definitely a hard thing. So much remote. So, a few things just to kind of do a quick recap. Um, you got through that time by staying in front of people, by building great relationships, really good communication, by showing up consistently. Those are four that stuck out. Anything I'm missing here?
Um,
Hard work and service. Like,
you you got you've got people have to believe your word, and if you tell them that you're going to be able to do something, you got to be able to do it. You can't make promises that you're not going to deliver on.
right,
And you know, I've seen, yeah, I say I've seen a lot of people kind of really get run out by over promising and just not delivering. And
you don't get a second
you
chance
you
very often in this type of industry. It's like you mess up once,
yeah.
but that's not an honest mistake.
Yeah, yeah, you gotta, and you gotta, if you do make a mistake, you gotta own it.
Right.
You can't blame, you can't point the finger, you you can't lie. You just can never lie. And that goes for your life, personal,
I agree.
with everything. But if somebody doesn't think that they can trust you with whatever it is, on, okay, something as simple as, okay, yeah, I can make a closing date by, 10 days. Well, if it's 2 weeks, I mean,
Right.
there's things that happen, but
There have been lenders that my clients have worked with in the past that they were so upset they pulled all their money out of that particular bank
oh, no kidding.
because they didn't meet the deadline. It was very reasonable. Poor communication. It's been there was a time where certain clients they're done.
Yeah,
Like like it really ruined their
yeah,
experience.
yeah. So, people will say, "Well, what does it take to do business with somebody?" Well, they say, "Well, first thing, they have to like you." Well, I think even before that, I mean, they have to believe you and trust you.
Sure.
I mean, if you don't have that, then you don't get to the liking part, right?
Right. Because they don't even bother to get to know you.
Yeah. So they gotta trust you that you're gonna be, good with your word.
Right.
You're not gonna sugarcoat anything, and sometimes you have a lot of bad news to say in this business, or things that people don't wanna hear, but you gotta you gotta be honest and be upfront with that so it's not a bigger problem later.
Yeah. Trust is key for
Mhm.
sure.
Yeah.
Anything else that you'd want to share before we wrap up?
Um, no, I'm just, looking forward to, the spring, market. Usually seems to come around in March is when it really starts heating up. Um
Right.
I want to say let's get ready for rates to come down, and everybody that bought in the last year at 6% or higher, we can get you a lower rate and refinance. But I don't have a crystal ball on that, so we'll see how that works out. But
Yeah.
um, Yeah, there's a lot of talk on interest rates right now, and there has been because historically speaking, they're not bad right
Right?
now. But
Yeah, below the
when you
average.
come from 2.75% to 6.75% in 18 months, it's kind of a shock to the system. So we're digesting that right now. But yeah, I mean, it's adapting just like we have to.
Right? And the average, the median, was I think 7.5 or some and some change. And I keep saying now we're not comparing against 2.75 as much as we are last year at 7.5 or whatever. So
Yeah,
they're down a little bit from what they were. So that's become more of the norm. I mean,
yeah. I think as far as getting the market moving briskly again is a rate that sellers are going to feel okay about trading their 2.75% rate with whatever the current rate is. And I'm not sure what that is, if it's in the fives or for the inventory.
right. Yeah. Well, I'm looking forward to a good spring market too.
Same here.
How can people find you?
They can call me,
Google Bob Hein,
Google
Mercantile
Bob
Bank,
Hein. Yes. Yeah.
HEIN.
www.bobheinmortgage.com.
There you go. Well, thanks, Bob. Appreciate it.
Thank
Thank you,
you.
guys.
My pleasure.
Please like, share, and subscribe if you've enjoyed this podcast.